Hello, I'm Rick Kirschbrown, CEO of ShortSaleTopGun.com. I'm here today to blow the lid off yet another shocking mortgage-related scam that you need to know about, and here's the story. Like many other banks, IndyMac closed its doors. They were seized by the FDIC in July of 2008. Eventually, the assets of IndyMac Bank were sold to OneWest Bank by the FDIC in March of 2009. Well, guess who owns OneWest Bank? That would be Goldman Sachs VP Stephen Mnuchin and big-time Sachs investors and billionaires George Soros and John Paulson. For the record, John Paulson is not related to former Goldman Sachs CEO and ex-U.S. Treasury Secretary Hank Paulson. Now, all of IndyMac's current residential mortgages were purchased at 70% of the par value, and all HELOCs were purchased at 58% of the value. But, just to make an awesome deal even better, the FDIC decided to cover between 80 and 95% of the losses OneWest Bank might incur from short sales or foreclosures. Now you're probably wondering why you should know about this. Well, in the event of a short sale or foreclosure, the loss is calculated using the original loan balance and not the amount OneWest Bank paid for the loan. Here's a real example. Watch this one closely. This is really going to get your blood boiling. Take an actual loan amount of $478,000 plus 6 months of missed payments for a grand total of $485,200. OneWest Bank paid $334,600 for that loan. Now, the underwater, upside-down homeowner has an all-cash offer that nets $241,000 to OneWest Bank. Stick with me now. According to the FDIC formula, you take the original loan amount minus the amount of the offer, and that leaves you with $244,200. Next, according to the sweetheart deal, the FDIC writes a check to OneWest Bank for 80% of the net loss. So in this case, OneWest Bank gets a check from the taxpayer, courtesy of the FDIC, for $195,360. Okay, so now add the $195,360 from the government to the $241,000 cash offer, and OneWest Bank just grossed $436,360 on a loan that they bought for only $330,600, and all they had to do was sell it for whatever they wanted to. They can't lose money on this deal. Think about it. So OneWest Bank just profited from the short sale to the tune of $101,760, all thanks to this insane arrangement that they have with the FDIC. So the next time you ask yourself why it's so hard to get a loan modification, the answer is because there's too much money to be made with short sales and foreclosures. Are you ready for an encore? Now remember, even though OneWest Bank profited by over $100,000, the house was still sold for less than the full loan amount. In this actual scenario, the borrower was forced to sign a promissory note for $75,000 with OneWest Bank. So who really pays in the end? Well, I think I'll just let you decide that one for yourself. Oh, and by the way, the FDIC just announced that it needs to start borrowing money from the Treasury. The Treasury being the place where all those Goldman Sachs guys called home before they called OneWest Bank home. If you're as mad about this as I am, please share this video with everyone you know. Help me blow the lid off this insane scam, and thanks for watching.